Have you ever noticed how the people who look the richest aren't always the ones becoming wealthy? It's an uncomfortable thought because we've grown up in a world where success is expected to be visible. A nicer apartment, a newer SUV, luxury vacations, designer clothes, the latest smartphone, released only weeks ago. Social media didn't invent this idea, but it made it impossible to escape. Every day we're shown carefully edited snapshots of lives that appear financially successful. After seeing enough of them, it's easy to believe that's simply what adulthood is supposed to look like. The problem is that appearances rarely tell you what's happening behind the scenes.
Imagine two friends living in Chicago. Both are 29 years old, both work in marketing, both earn around $80,000 a year. After taxes and deductions, they each take home roughly $4,900 every month. On paper, their financial lives should look almost identical, but they don't.
The first rents a luxury downtown apartment for $2,300 a month. He drives a new SUV with a $650 monthly payment. Another $220 goes toward insurance. His credit card carries a balance from furniture, vacations, and electronics, costing another $300 every month in minimum payments and interest. Student loan payments add another $350. After groceries, utilities, fuel, subscriptions, dining out, and entertainment, there's almost nothing left. Despite earning more than many people ever will, he still checks his bank account before payday.
Now, consider the second friend. She earns exactly the same salary. But instead of upgrading everything at once, she rents an apartment that's perfectly comfortable for $1,600 a month. She drives a reliable used car that's already paid off. She uses a credit card but pays the balance in full every month. Her student loan payment is the same, but she avoided adding unnecessary monthly obligations simply because she could qualify for them. By the end of the month, she consistently has several $100s left over.
Neither person is irresponsible. Neither made obviously terrible decisions. The difference isn't income. It's how each person defines success. This is one of the biggest financial misunderstandings in modern society. Many people believe higher income should immediately produce a higher lifestyle. Employers reward raises. Banks increase credit limits. Dealerships approve larger loans. Apartment buildings advertise luxury living as the natural next step. The entire system quietly encourages one message. If you can afford the monthly payment, you've earned the upgrade. Affordability and financial strength are not the same thing. Let's look at one simple example. Suppose someone finances a car for $650 a month over 5 years. That sounds manageable for someone earning a professional salary. But over 60 months, that's $39,000 in payments. Add insurance, maintenance, registration, and financing costs, and owning that car may easily cost over $50,000 in payment.
Now, imagine investing just half of that monthly payment instead. $325 every month invested at an average annual return of 8% to roughly $60,000 in about 10 years. Keep doing that for 20 years, and the difference becomes well over $190,000. The decision wasn't just about transportation. It quietly shaped future financial freedom. This is where psychology becomes more important than mathematics. Humans naturally compare themselves with people around them, not because we're irrational, because that's how our brains estimate whether we're succeeding. Years ago, comparison mostly happened among neighbors, coworkers, and friends. Today, thousands of carefully edited lifestyles fit inside one phone screen. Most people aren't comparing themselves to one successful person, comparing themselves to hundreds. And every comparison subtly shifts what feels normal. A luxury kitchen starts feeling standard. Annual international vacations begin to seem expected. Replacing perfectly functional electronics feels responsible rather than optional. Danger isn't spending money. The danger is slowly losing the ability to recognize when spending is driven by satisfaction and when it's driven by comparison.
Financially intelligent people usually look at the same purchase very differently. They don't ask only whether they can make the payment. They ask what future opportunities that payment quietly replaces. Every recurring expense competes with something invisible: emergency savings, investment growth, career flexibility, the ability to change jobs without panic, the freedom to work fewer hours later in life.
Real wealth often looks surprisingly ordinary because much of it isn't visible at all. Can't easily see someone's investment account while walking down the street. Can't recognize financial security by looking at someone's watch. And you certainly can't judge someone's net worth from a social media post. That's why financial success often looks completely different from what social media taught us. One is designed to be seen. The other is designed to last. Neither lifestyle is automatically right or wrong. The important question is whether your financial decisions reflect your own priorities or someone else's highlight reel. Because in the long run, the people who quietly build options usually enjoy more freedom than the people who constantly display success. If this helped you see money from a different perspective, consider subscribing for more thoughtful conversations about personal finance.